Good afternoon, everyone. Thank you so much for joining us this afternoon. We have a lot to talk about today, but before we get on to those topics, I want to introduce our two guests. We've got Bob Hoban. We are absolutely delighted to have Bob back again. Bob was on one of our webinars a few months ago, and of course, that was before the December the 18th executive order, and we thought it would be a good idea to have him back now that the executive order has been issued. We're going to talk a lot about what that means and what it doesn't mean. Uh, Bob has been a real trailblazer. I'm going to let both Bob and Suehiko introduce themselves. Suehiko, he is a cannabis law attorney. He has been with the Cogent Law now for upward of 6 months. And he also is going to talk a little bit more about his background. He's got some insider baseball. He was an operator himself for a while, so he can talk about it. He can advise his clients from an operator's perspective, which is pretty unique. And before I let them talk a little bit more about themselves, I just a couple of housekeeping issues. We're gonna talk for about 45 minutes and then have about 15 minutes for Q&A. And on your screen, if you could put any of your questions in the Q&A button, not in the chat button, but in the Q&A button, that'd be great. A few more words about Bob. He has been an absolute trailblazer on when it comes to cannabis. He started the Hoban Law Firm way back when, before anyone else was even thinking about it. He was one of the bad boys back then, uh, who uh, who got the ball rolling, and he now advises on an international level various national governments around the world on cannabis regulation. Bob, I'll hand it off to you. Maybe you could say a few more words about yourself.
Sure, Chris, I really appreciate it. Always an honor to be here with you and Cogent Law. You guys put on world-class events, and Suehiko, it's wonderful to be here with you as well. Yeah, I was a cannabis lawyer in the space for a very long time, perhaps the first cannabis lawyer. Built the Hoban Law Group, the first and largest cannabis business only law firm in the world. Sold that to a big international firm in 2021. Since that time, I worked in big law, built their cannabis industry group at Clark Hill. I have stepped away from the full-time practice of law. I work as a fractional executive for international cannabis companies, and I am the co-founder and chairman of CTrust. And that's why this topic, Schedule 3 and the impact on financial institutions, is so near and dear to our heart, because CTrust is at the forefront of credit ratings, risk assessment, and banking compliance related issues for purposes of the cannabis industry. So thank you, Chris.
Yeah, thanks so much for that, Bob. Suehiko, why don't you say a few words about what you do now in practice and what you did before?
Sure. Yeah, thank you. So, as Chris was saying, I've been with Cogent now, I guess, I guess, joined in July. So, relatively new to Cogent. And my current practice is focused in New York as a fractional GC, and advising clients across the board as one does in cannabis. I Before my current iteration of practice, I was an operator. I founded an outdoor cultivation facility in Massachusetts, and then worked in various capacities for a vertically integrated operator in New York. Left them in June as the general manager. So, as Chris pointed out, very much look at this from the insider baseball perspective, having felt the pain of building a business and rolling up my sleeves.
Yeah, thanks so much for that, Suehiko. I'm kind of the odd man out here. I'm not a cannabis, or nor was I ever a cannabis attorney. I started my career out here in the U.S. As a financial regulator. I worked for the State of Maine Bureau of Financial Institutions and jumped ship back in 2014 and worked for an financial institution that was one of the first in the country to offer cannabis banking to our cannabis folks in Maine. Was there for 9.5 years, and for the past 2.5 years, I've been at Cogent Law, and I've been advising banks and credit unions on how to bank cannabis, and that kind of falls into four categories very briefly. Banks, wanting to get started in cannabis banking, perhaps on the depository side, banks looking to expand into the commercial lending side, and we'll talk a little bit more about that with uh, uh, the rescheduling and 280E on the forefront. I've helped a couple of that gotten into a little bit of trouble with their regulators with their cannabis programs and have needed some remediation. And then I've worked with some that have very well developed and mature programs, but they've kind of gotten bogged down with some inefficiencies and are looking for some advice on how to make their programs more efficient, cost effective, without, while staying on the right side of the line with their regulators and their examiners. So those are the sorts of things that I do. So, Bob and Suehiko, I thought we'd start off our conversation by talking about the December the 18th executive order itself, and what it says and what it doesn't say. And Bob, maybe I'll start out with you, and then we can kind of jump in and discuss at will.
Sure. Appreciate that. December 18th, President Trump signs an executive order um, directing relevant agencies within the executive branch to proceed with the reclassification of marijuana, spelled with an H, as it is under federal law, for reasons that we won't get into today, but somewhat of an unusual spelling with a history. Um, and it chose to recognize that cannabis does have medical efficacy. This executive order was the first time since the Nixon administration in 1971 where there was a specific dedicated effort to reclassify cannabis. Of course, the Biden administration had begun this process in the waning years of those 4 years of Democratic control in the White House. And there was a 255 plus page memorandum that had come out from HHS, which recognized all of the scientific merit of cannabis and sort of made sense that it shouldn't be Scheduled 1 anymore. Schedule 1 meaning it has a high potential for abuse and no medical benefit whatsoever, no medical efficacy whatsoever. So this directs that process to move forward. Now, interestingly, and for those attendees, this does not reschedule cannabis on its own, this executive order. The president does not have that unilateral authority. It can happen through an act of Congress. It can also happen through the process that we're about to see unfurl. Now, this process was begun under the Biden administration. It reached several administrative roadblocks in front of a now retired Judge Mulrooney, the ALJ, the administrative law judge. And that process will begin again. So what we're waiting for as a result of that is a publication in the Federal Register, which moves the process forward, and then a statutory time period after the publication in the Federal Register is when this ALJ, this administrative law process hearing begins. That hearing will be subject to lawyering from all sides of this issue, to say the least. We've seen that happen in the past, and should result in the formal adoption and approval of marijuana being moved from Schedule 1 to Schedule 3. Just one other note about the executive order is that it talks about CBD products as well, and hemp products more generally that have been determined to be safe. That's not an exact quote from the order, but the order really was threefold. It was reschedule marijuana from Schedule 1 to Schedule 3. And then it said CBD should in effect be reimbursed through Medicare and made available to older Americans, which was a big shot in the arm to the hemp industry. But then there's a third shot in the arm of the hemp industry here, which creates more confusion, particularly given the hemp ban that we saw happen back in November. Is it basically says assess all hemp derivatives that are safe and allow those to exist as well. which perhaps creates the beverage carve-out that we've all seen coming for a very, very long time on hemp derivatives. But that's speculation. But yeah, Chris, as a practical matter, it doesn't change it to Schedule 3 marijuana on its face, but it does direct the process in an expedited manner. And then we do understand that that process is beginning. And I don't want to say behind the scenes in a sort of a covert, under the table kind of way, but it's beginning through the three agencies that are relevant here. HHS, Health and Human Services, the parent agency of the FDA. The rulemaking ALJ, Administrative Law Judge. I don't know the name or the background of the new judge, given that Judge Mulrooney retired, but it will be ultimately handed to that judge. And thirdly, and this is an important piece, this is the piece that's happening right now. Office of Legislative Counsel prepares a memoranda. They assess the practical implications of this and put out, in effect, a federally government authorized white paper. That process is well underway. So I hope that gives our attendees sort of the lay of the land and understand that this did not create an automatic legalization or a panacea. It was a structural reset around cannabis. And the first time in U.S., well, actually, it's the second time publicly in U.S. history that the U.S. government recognized the medical benefit of cannabis. The first being in November of 2020, when the U.S. took a formal position at the United Nations to advocate for the classification of a new category of marijuana called medical marijuana.
So it's interesting, since that publication, since the publication of the executive order, I've gotten very, very little in my eyewash about, what's going on. But it does sound, from what you're saying, Bob, it sounds like there's a lot going on kind of behind the scenes right now. And, again, looking at the language in the executive order, Trump is directing, as I recall, Bondi to work as expeditiously as possible. I think that's a quote from the executive order to get the ball rolling on this. So I was talking to both of you earlier and telling you both how tired I am of being wrong when it comes to trying to predict Washington, D.C. But do either of you have any kind of thoughts, whether it will proceed eventually, and whether we'll have a rule in place at some point in time with the rescheduling, and B, if so, when? Suehiko, do you have any thoughts on that?
Yeah, I always look at it. I sort of put it more in terms of I would make it more likely than not that it will happen. The timing, of course, is something that I shy away from, and I know Bob can speak to that a lot more. But ultimately, my advice always is to kind of hedge, right? Kind of map out what it looks like under both circumstances. And then, of course, part of what this conversation will be about is the sharp distinction between a Schedule 3 framework and then everything that continues to operate outside of that framework, right? And so what does change, what doesn't change, and then how do you prepare for that? And that goes across the board. I mean, everything from company valuations to P&L, financials, investor disclosures, and then, of course, all of the contracts that one is entering into these days, very commonly the brand licensing agreements, the manufacturing and toll processing. And so a lot of implications for those. But yeah, I mean, we'll touch on a lot of this. So the predicting the timing, I would advise, assume, and one thing we'll touch upon is in fact, assuming that this goes to a Schedule 3, then 280E on its face, it no longer applies. Under the terms of Internal Revenue Code 280E, it explicitly calls out Schedule 1 and Schedule 2. So this offers some relief, and what that means, of course, we can debate at length, which I'm sure we will a little bit today.
Yeah, all good thoughts. Thanks, Suehiko. Bob,
Yeah.
what are again, I don't want you to,
Yeah.
I'm not asking for a crystal ball here, but what do you think? Do you think the chances are good of the rulemaking process proceeding? And if so, timing? Any thoughts
Yeah,
about
I think absolutely. I mean, the president really, uh, by the way, let's not forget, maybe the only thing that Joe Biden and Donald Trump agree on is cannabis rescheduling. Did anyone else see that coming? I mean,
Right.
that's pretty miraculous. But I say that because, it was fairly clear to those of us that paid close attention that Biden's efforts were sort of a political ploy to attract votes. Didn't necessarily work out for the Democrats in the White House on election day, for better or for worse. I also think that this is something that is it's good policy, certainly. I think all of us in the cannabis industry understand that, or at least it's a step forward in policy. But I also think it is an election day ploy, looking at the midterms ahead. So I believe the process has to move forward administratively. That doesn't mean the executive branch and the White House can control and make sure it gets done in 2026 before the midterm elections. That can be held up through legal challenges and otherwise. But again, the technical pathway is publication in the Federal Register and a ALJ hearing. That ALJ hearing will be subject to lawyers lawyering, determining who should be on the list of witnesses by and through the ALJ, the judge. And then once that process reaches a conclusion, I would presume that marijuana is Schedule 3. And then you've got lawsuits in courts, not necessarily focused on the specific ALJ proceedings. So that could take some time for actual implementation, but I would be very, very surprised if the White House didn't push this to get done in the first 4 months, or at least the process to get going in earnest in the first 4 months of this year.
So that's a very interesting insight. And I think the fact that we may be seeing a publication in the Federal Register at some point that this is actually a continuation. I think if I was reading the executive order correctly, he's directing Pam Bondi to continue with the rulemaking that had been started during Biden's fourth term, which means that the comment period, there's not going to be a comment period. That's over. That we had something like 43,000 comments, 40,000 of which I think were in favor of rescheduling cannabis. So now we are sort of moving on to the next step, if I'm correct. Would that be a fair comment, Bob?
I believe that's correct. It's not quite picking up where we left off, but also not far off because that process was in its nascent stages to begin with.
Okay, good. He also threw out a few cookies for the hemp industry in that executive order. And I think Trump was kind of uncharacteristically polite in the executive order. He said he wanted to update the definition of hemp that Mitch McConnell had thrown in at the 11th hour in the November appropriations bill, which essentially, recriminalized a very large majority of the infused hemp product industry here. Uh, do either of you want to speak to that a little bit?
So
Sorry,
Higo, if you've got any
yeah.
thoughts, please go ahead.
Yeah, no, please. Actually, I was gonna push that to you.
Look, the hemp versus marijuana thing has been much controversial. I've covered it at length in my Forbes columns. Um, I know for a fact that the hemp industry lobbied to get those hemp provisions into the executive order. So there is a give and a take. What does that mean for the hemp sector going forward? That remains to be seen. We've got a bill on the table right now through this resolution that was passed before the end of the year that bans effectively all extracts from the hemp plant, but it takes effect at the end of this year, in November something of this year. Um, there's going to be a lawsuit if there's not a political solution because you can't pass substantive legislation in a spending bill, a spending resolution, which is what they did. The law's black and white on its face regarding that. But the industry is trying to work through this. So the end of the day, that's why I talk about the legislative council office is because what are the practical implications? How do you carve a pathway under existing federal law with marijuana being rescheduled to 3 and hemp having some relevance as a pathway because the federal government and politicians around the country don't want to shut down what is what at least is reported to be a $30 billion hemp industry in the United States, and all the jobs that align with that. So something has got to give. I don't think there's a one plant solution from a policy perspective at the federal level that assumes too much of our politicians. That's too much too fast, to quote the late great Bob Weir. But that's neither here nor there. I think that here we are, looking at where marijuana is situated and what are the Schedule 3 implications. Because, Suehiko, you worked in the marijuana sector very recently, and still have your hands in there deeply as a practitioner. How on earth does a licensee, for example, just pick a state like the state of New York, not any particular operation, but a hypothetical operation, how does it assume it's going to comply with Schedule 3 when I believe, having studied the requirements under the FTA greatly, that a cultivator and a manufacturer could somewhat easily register as a Schedule 3 operator with the DEA, but I don't see how dispensaries fit. So I just wonder, if you're an operator, a licensee in a particular state, how do you make heads or tails of this?
Yeah. Well, and I think, part of what sort of weaves through this conversation, kind of harking back to the question about CBD, is a lot of this is very discrete. It needs to be sort of looked at in its own context, right? And it's very difficult to expand this beyond where it is. And so from that standpoint, if you're looking at the adult use operators across any state, ultimately the only thing that's affected by this change is the 280E because of the way that Internal Revenue Code is worded, Schedule 1 and Schedule 2. But as it relates to the legality, anyone who would be operating outside of the DEA FDA framework is still operating outside of the law, right? Is still federally illegal, which then, of course, lends itself back to the conversation around a Cole type memorandum, right? The use of resources at the federal level. Now, ultimately, there are huge implications, right? 280E does a lot of heavy lifting from the operational standpoint. And really that kind of goes into a lot of the conversation that I think will drag you into, Chris, around the banking and potentially lending, whether or not, and Bob earlier in the conversation we had made a very good point about potentially opening up cash flow was sort of an assumption that I had made. However, if you think about it operationally, many operators actually are not paying their tax liability. Now that does pushes the buck. And so then it changes the balance sheet and potential liability associated with deferred taxes. But it still does not change the fact that you are still operating outside of that federal framework. So, but for 280E, I don't see very much changing outside of entering into that DEA framework.
Yeah, I agree with you. I think the 280E is the big deal in all this.
Yeah.
And we'll talk a little bit about what that means from a banking perspective in a little while, perhaps. I know that there are, going back to the CBD and the hemp conundrum right now. It's not only a conundrum for the industry, it's also a conundrum for all the banks and credit unions that were banking hemp, thinking that, oh, this is a less risky, we don't have to do our filings for these businesses the way we have to for our cannabis businesses. But it's a big deal from a banking perspective too, given the fact that, as things stand now on December the 12th, 2026, 90%, the infused hemp industry is going to be recriminalized unless something happens. Bob, do you want to talk a little bit about what efforts are underway now to fix that? I know a lot of heads were spinning when that appropriations bill came out and said, "What just happened?" It was
Sure. Sure.
crazy.
Well, I mean, let's face it, if you want to have a federally compliant product that features THC, it's not going to be through Schedule 3 and then sold in Circle K's or liquor stores, okay? Let's use hemp beverage as an example. A hemp beverage that contains 2 to 5 milligrams of THC derived from the hemp plant. To your point, Chris and Suehiko, it's sort of been the open door for investors to come in and say, here's an easier pathway. We see the alcohol industry, distributors are all over this. They love these products. They see sales of alcohol and spirits decline quarter after quarter, year after year, with different generational preferences and the movement towards other products. So if we're going to assume that pardon me, THC infused beverages in low dose milligrams are going to be available as they are today in the United Center at a Chicago Bulls game in Chicago, for heaven's sakes. I mean, this is how far we've come. That was an article I read this morning, by the way, so that's relatively new news. But the point being is you can't have a Schedule 3 registered ingredient put into a can and sold in a Circle K or a 7-Eleven. That's not a medicinal outlet. That's not a medicinal product. It hasn't been authorized for medicinal use. So I guess my point, Chris, is functionally, you absolutely need THC from hemp derived sources to be a federally legally compliant way to deliver THC in vapes, gummies, beverages, and so forth and so on. So the current effort is to extend the existing ban deadline at the end of this year in the fall for 2 years, which will in fact give the farmers incentive to plant this April and use that hemp material in the United States for these hemp derivative products over the next year to 18 months, assuming the manufacturing and extraction process. But you need it. You absolutely need it. Farmers need it. The United States needs it. The industry needs it because the Schedule 3, let's make no mistake about it, has nothing to do with adult use cannabis. Nothing. So if I walk into a dispensary today, which I probably will tonight, and I go in and I show my 21 or over ID, I can purchase something. But that's not a way that a Schedule 3 substance is made, sold, or regulated. So the implications are far, far more diverse. Now, going back briefly to the 280E topic, right? 280E is the only absolute clear thing under the law that moving cannabis, marijuana from Schedule 1 to Schedule 3 actually helps with. The only technical thing. Now, there's other practical implications, which we're going to get into a number of those things: bankruptcy, banking, lending, and I think lending is going to be a really, really, really big piece of this. Banks lending, not these sort of usury style aggressive lenders that we see in the space today. And it'll be a much more competitive and business friendly environment. But if we go back to 280E, 280E, to Suehiko's point, does in theory, well, on paper, go away. Meaning, if I'm a cannabis licensee in the state of New Jersey today, I can't take ordinary business deductions. That has an impact on my books and my accounting. That has an impact on my financial statements, my valuation, my bottom line, and my free cash flow, at least in theory. Schedule 3 or 280E would go away under this scenario, and you'd be able to take those deductions. So then the practical implications, Suehiko, to your point, is are the operators actually paying those taxes now, such that when the tax implications are relaxed, then all of a sudden they're going to have much more cash flow to expand, to pay employees, to deliver that to the consumer with lower prices, or to service
Debt
lines of
service,
credit and loans. Please.
debt service. Yeah, just adding to that list. Yeah, yeah,
So
yeah.
anyway, so that's the question, right? Is that an implication that matters? And the only reason I'm skeptical about that is, having practiced in this space exclusively for the better part of the last 18 years, all of the accountants, all of them that advise my clients, told them to treat it as an unfunded future liability and not pay the taxes now. Wait till you get audited. And I don't know if I always agreed with that theory, but that's the way a lot of them treat it. And there was an article that came out within the last 18 months that said, a smattering of the top MSOs in the country with public filings, that they owed about $500 million in back taxes to the IRS to begin with. So I've also talked to people that work with smaller operators, the $1 to $5 million dispensary, and those companies are paying their taxes, at least, based on this sort of, informal reporting. So I think it cuts both ways, but that is the one place where we know that there is actual technical legal relief based on the language in the statute.
So I can tell you, I mentioned at the beginning of this conversation, I was the odd man out, and I work with banks and credit unions, not cannabis operators, and I can tell you that there has been some uptick in interest among not just the very small banks and credit unions, the community-based ones, but some mid-level ones I mean, that's frankly where financial institutions make their money. It's on especially when it comes to premium-based pricing, which, you price for time and you price for risk. And there is certainly additional risk here. Bob, you mentioned the usurious rates that are being charged now by private lenders. I've been hearing upwards 20% plus on loans and frankly, that's not sustainable for a lot of cannabis operators. So it is certainly my hope that more financial institutions will start considering commercial lending. Interestingly enough, the FinCEN guidance doesn't make a distinction between depository services and lending. It talks about financial services, which, while it's a pretty thin document, I'm assuming that means both. And
Well, and Chris, just a note on the lending piece too. Lending is really twofold, right? The implications are twofold. And we sit around, my partners and I at CTrust, we talk about this a lot, but at the end of the day, lending is banks need to decide that they're going to get in and lend. Because to your point, it's been said if you ain't lending, you ain't banking. And depository accounts are not going to sustain a bank in and of itself because of the money making element of it. But so banks need to decide if they're going to go in, what gives them comfort to go in, who they're going to lend to, and create a more competitive environment, which should help the industry. But here's the best part: refinancing those 20+% loans. We are
yes.
going to see a large influx of companies come in and refi all of those usury style loans. And we think that's going to be a big, big, big shot in the arm to the industry. It'll be a bit of a cottage industry, but those rates, you can bring them down to 11 to 13%, still make a bunch of money lending, and not be subject to the uncertainties that come from the federal government. So I think that's a big shot in the arm for the industry. And just how do you evaluate that? How do you evaluate the risk? How do you evaluate who you're going to lend to?
Yeah. And, the other thing that's happened of recent is that there are vendors out there like CTrust that have platforms that can significantly mitigate both the financial and the non-financial risks associated with commercial lending to cannabis industries. Not to mention the fact that I've always been an advocate of carrots for compliance. Making if they're doing well on the depository side, you know, uh, fulfilling all of their compliance obligations, for several SAR filing periods, suspicious activity reporting periods, then consider them as a candidate, depending on what their financials are, for commercial lending, and particularly with these tools that are out there. Like, I don't mean to, be blatantly plugging CTrust, but CTrust, I've looked at that program in particular, and it looks like a pretty robust program.
Yeah, I think just sort of adding to that and really building upon kind of what you're saying. So there's from the banking side, and obviously, you should talk about this more than I should, Chris, but you've got the compliance side, but then you also have that credit risk, right? The credit rating, right? And so if you have a bunch of businesses now where you're not as worried about this potential tax liability, or both either disclosed or, let's say, hidden, right? Because something I alluded to, and something I've been giving a lot of thought to recently, a lot of work around the tolling and manufacturing agreements and brand royalty agreements. And the 280E and the section 471, 263A they're fairly straightforward, and they've been litigated, and it's fairly clear, right, over at least the last decade, that there are great restrictions on the ability to deduct, right, and what you can actually include under 471. And as very commonly practiced, for example, the so-called asset light brand licensing agreements, which are all over most markets at this point, a lot of them just have a straight 20% brand royalty on net sales. Now, that to me seems like an enormous liability, right? And if you actually look at this, so this is something I've modeled quite a bit, and let's say on a $16 million top line revenue, the difference between a brand royalty that is below the line, so-called, or included in COGS is a net profit of over $1 million, right? That's a huge difference. So if you wipe those things away, then now all of a sudden, not just the disclosure, but the credit, right? The ability to pay back and service debt from the banking side, changes dramatically.
Absolutely. And Bob, to your point, it's some of this might be banks always have to bear their examiners, the regulators in mind. They're going to be looking at how you deal with credit risk as well as the compliance issues too. But if you've got a better valuation, from your cannabis banker, that's going to make that bank's financial regulator happier. I do think that both from a regulatory point of view as well as from a underwriting perspective, I think that 280E is going to make a bit of a difference when it comes to banks' perceptions. There are some other compliance risks associated with you creating a stickier relationship, which is a good thing. But if things go south, if things go pear-shaped with that cannabis operator, that's not such a good thing. For either if things go pear-shaped from a compliance perspective or from an underwriting perspective, then you've got some problems there. But you having a stickier relationship is good because it keeps your deposit levels more even, which helps with your capital ratios and so forth. So it's a it's a it's a knife that cuts both ways, I think, the commercial lending side, but it's just a matter of managing risk, and there's a lot of upside potential too with 280E going away. So we've talked too much about banking. I was going to be the sidekick on this show. So Hiko, why don't you talk a little bit more about, you've touched on some of this already, but just from the operator's perspective with
Yeah.
rescheduling.
Yeah. Yeah. And, I hope I don't reiterate myself too much, but, again, this 280E lifting it does a lot of work here. And this goes everywhere from, how you set up your chart of accounts and the tax accounting, and management reporting. And it seemed to me always this disconnect, right, between trying to show GAAP compliant financials, SG&A, and say, for example, the issue that I just brought up around brand royalties or whole processing fees, licensing fees. And again, just to sort of quote the language, for it to be includable under 471, it has to be related to the acquisition or creation of that product, right? And it's very, very difficult to justify a net 20% royalty on net sales above the line. But the question then becomes, well, how do you reconcile that? How do you disclose that to investors and potentially to creditors? And then how do you structure those deals? Now, like I said, there's sort of industry practice, and what a lot of companies are doing, say around the 280E, is just kicking the can down the road and waiting for audit, which is a very common practice, common strategy, which now sort of lends itself to many of these companies have more tax liability than they do have available cash, right? And so, what does that mean? Well, ultimately, it really comes down to the careful planning and the coordination. And it really, from the sort of operator standpoint, it starts with the chart of accounts ultimately, right? And how you're going to characterize these things. One of the strategies I've been advising clients, which still is not without risk, is, let's say, on the brand royalty, and this is something that several contracts that I've seen use this strategy, where it's essentially a raw material packaging consignment, right? And so that packaging gets above the line. Now, my only real point of bringing this up is to say, with 280E gone now, let's assume that this happens, we can restructure these deals so they're a lot easier to actually structure and to calculate. And so what I mean by this, right, if I am able to structure a deal, let's say on net sales, that really lends itself to a much easier calculation than if I need to assign a value to each piece of raw material that takes into account my true costs and then, of course, top line revenue, right? And so the ability to simplify those deals then down the road, when there are disagreements about who owes what based on the terms of the contract, that then from an operational standpoint becomes a lot easier to track. And then, of course, the management reporting, the financial reporting, and all of that downstream.
Yeah, thanks for all that. Bob, do you have anything to add to that or?
I think to tie to the points you're both making is 280E, the implications free up accounting. It provides a rosier picture from an accounting perspective, which in theory should increase valuations of company or at least make them a little bit more something you can get your arms around. And ultimately there are ripple effects from that. But Chris, to your point, there's so many things outside of 280E that one must consider, whether it's bankruptcy or whether it's capital market access and the ability to lend. A lot of that comes down to banking. But Chris, I might just sort of take the liberty of asking you a question because your expertise is second to none in this space when it comes to banking. Do you think that the Schedule 3 movement actually makes it more likely that safe banking or something like that actually does get across the finish line?
Great question. So I've heard two opposing arguments to that. I've heard that yes, this is part of that momentum toward Safer Banking Act getting passed. We're on that road, we're on that trajectory now. Let's keep the ball rolling. I have also heard from, a couple of respectable sources that have said there's no urgency now. There's less urgency now with Safer Banking Act getting passed. I have always been of the view that, and this is going to sound very strange coming from an attorney, that the Safer Banking Act, which provides that safe harbor from prosecution for banks and credit unions banking cannabis, that's a little overblown. I mean, as a financial regulator, I can tell you, well, and history is on my side here. We have not seen a any state or federal prosecutor go after a bank or credit union for banking cannabis. The only public action out there right now is a consent cease and desist issued by the NCUA against, I think it was Live Life Credit Union back about 4 years ago. And I don't think they had much of a program. They really didn't know, I think, what they were getting into with their program. There are all sorts of very, very compelling reasons why banks should be safely vaulting this money and keeping our neighborhoods safe, enhancing, state and local initiatives to create a business-friendly environment. And then you've got the reporting. I mean, you are on the side of law enforcement and regulators by having to do these SAR filings. You're providing them with, at least with the enhanced filings, the priority and the termination filings. You're providing them with pretty good information for a possible prosecution against a cannabis operator that's gone to the dark side. So I really don't ever see there being much of an appetite on the part of a prosecutor for going after a bank or a credit union for banking cannabis. And so I've always taken the view that you've got these kind of three circles of risk: the compliance and BSA risk, the reputational risk, which I think is a pretty small circle right now, and then another, in my view, another pretty small circle in that is the legal risk associated with that. You've got if you're going to be doing the commercial lending, you've got that fourth circle of risk, the underwriting risk. But as I mentioned before, there are some pretty good tools out there for mitigating the underwriting risk. So anyway, and I remember talking to my CEO when I was at a financial institution 8 years ago, saying, "Hey, it looks like Safer Banking Act is going to pass." And it gets back to what I said earlier about being tired about being incorrect all the time when it comes to predicting Washington. That has just languished in Congress now for so long. I am, I'm through trying to predict whether that's going to pass. I don't know if either of you have any different thoughts about safer getting through, whether you, Bob, you've heard any insider baseball on that?
No, I mean the Senate has been
The Senate's been
the
holding it.
roadblock
Yeah.
every single time, and I think it was passed five separate times through the House. It's been the Senate every single time, and the Senate was led for most of those times, if not all those times, by Senator McConnell,
Yeah.
former Majority Leader McConnell. And I understand that that things are not necessarily changing from his perspective, but there's sort of a new sheriff in town, and you've got the fact that Trump has pushed this, and Trump is the de facto leader of the Republican Party, and it doesn't mean there's not different factions within the party, but I do, at least as I'm told, I don't lobby, but reports from lobbyists that I'm working with or that the groups I'm with are working with, the Republicans are coming around on this issue, if for nothing else, because they see the economic upside of this and they don't want to step out of line with the president. So I guess my point being is I think there's a greater likelihood that something could come out of the Senate, although the Senate is its own elite body, as we've always known, and doesn't necessarily go by the same beat of the drum that everybody else does.
Yeah, thanks very much for that, Bob. We are kind of running out of time and we do have some questions. So, Suehiko and Bob, if it's okay with you, maybe I'll just read some of these questions and we can kind of take them one by one. So
Please.
the first one here is what lessons, top three or four, good and or bad, can we take from cannabis and apply to psychedelics to move the needle forward for legislation, et cetera, especially here in New Jersey, since we've had a bill just was signed into law by former Governor Murphy. So yeah, that's a great question here. There's I think I haven't been following the psychedelics argument very closely, but I think it's kind of I think this is something that's going to be following in the wake of cannabis reform. Do either of you have a view on this?
Well, I'm
Bob,
going to
I'll
chime in here, just
yeah,
as a son of the Garden State myself, and also a big fan of Gitano Guy, the gentleman who asked the question. He's been a big push and a really great level for the psychedelics movement, not just in New Jersey but abroad. But um, look, the psychedelics industry and the marijuana industry to me are apples and oranges. They're not even close to being the same. I don't know why they're always mentioned in the same conversation. Now, if there's a lesson that we can learn here is the psychedelics models, state by state, tend to focus on therapy and providing services against the backdrop of here is the compound you will provide the services with versus the marijuana model, which is sell the product. It's a product-based model. So because the state-based legislation tends to focus on service-based models with very rigid standards in place, standards that I haven't studied each state, but they more closely mirror and align with standards that we would see under FDA guidelines already, that the psychedelics industry does have a better chance of sort of fitting a round peg into a round hole, or maybe an oval peg into a round hole, versus this square peg into a round hole, which is Schedule 3 in the existing commercial cannabis industry.
yeah. Thanks so much for that, Bob. I'm going to move on to the next question. Unless Suhiko, you want anything to add to that or?
Yeah, no, please go ahead.
Okay. So what implications on industries outside of growers, dispensaries like psychedelic guides using cannabis for guiding and any associated financial implications? Okay. Uh, I've got a note here. Suhiko, do you want to
Um,
take that one?
sure. I think this is very much an overlap. Am I
Yeah.
misunderstanding this question? It seems like a very related, right? It's uh, implications outside of grower dispensaries like psychedelic guides. again, these are very, these are discrete and distinct frameworks. And I think Bob did a really good job of kind of drawing that distinction. If I was going to draw an analogy, right, and Bob did touch on this, but it is I was shocked actually at how quickly the momentum around psychedelics built, right, after cannabis. And from that standpoint, I take that as, from the standpoint of political will, and framing, right, the evidence and the data that we see around psychedelics as it relates to, in particular, PTSD and veterans, right? So, the application specifically, I think, lends itself to this quick movement that we're seeing. But I'm not sure. I don't know if that exactly is addressing this question.
Yeah, I can speak to it from a he asks us about the financial implications, and I can tell you right now that, I mean, banks aren't even talking about psychedelics, banking the psychedelic, psychedelic industry. That's not even, that I have not even heard that word uttered by a bank or credit union yet. So, that's something I think that's, again, my mother always taught me, good things come to those who wait. And I think that's something we're going to have to wait a very, very, very long time for, if we get some kind of a federal regulatory regime in place. So, okay, let's move on to the next one here. Are you aware that the Senate voted to remove amendment language from a fiscal year 2026 funding bill that would have forbidden the Justice Department from using appropriated funds to carry out President Trump's executive order rescheduling cannabis? Let's just take it piece by piece. First of all, is that off the table now, or is that still on? Bob, do you have
Because it's my understanding. So this was talked about previously
Yeah,
when that resolution had been enacted. The resolution we talked about that included, amongst other things, the hemp ban. And
yeah,
then there is a very high likelihood, frankly, of a government shutdown in the next 6 to 8 weeks. Once again, so not being an expert in the federal government fiscal process, it's my understanding that these spending resolutions and these amendments are just floating back and forth. And it's, Republicans, generally speaking, jockeying for position and sort of digging in on the anti or the prohibitionist mentality. But we talked a little bit about, Trump and how there's factions in the Republican Party. Interesting, by the way. Remember, if anyone saw the press conference where Donald Trump did sign this executive order, he kind of says, I don't know who would use this stuff. I'm not going to use it, but maybe other people want to use it. I just thought that was some funny commentary there. But listen, that is not something to dismiss because, frankly, that is going to be a conservative Republican mentality for
yeah.
even those that see it as a financial or a policy change opportunity. But I guess, Chris, it's a long question to say. I'm sure, or a long answer to say. I'm sure there's going to be lots of amendments put back and forth. Republicans jockeying for position through the spending bill to get their way in there. Hell, McConnell got his way in there with the hemp ban that was
Yeah.
snuck in there at the last moment back in the fall. But if I look at the end of that question, the probability of rescheduling not happening, I can all but guarantee that the process will begin in the spring or the late spring. But the process can get held up again. The ALJ, the administrative law process, the rulemaking process can get held up by litigation or claims of litigation or procedural issues that are raised in the ALJ process. After all, a lot of eyes are going to be on this process, and this judge, who I'm not familiar with this judge's name, but it's a new judge that will preside over this matter, is going to make sure that he or she proceeds really, really, really carefully. And then even if we get the formal administrative law judge decision that says, yes, marijuana is now Schedule 3 versus Schedule 1, litigation is almost certain to follow. Not just litigation, but a bunch of anti-cannabis or prohibitionist mentality politicians at the federal level proposing bills or talking about bills and talking about amendments. So this process is far from over, but I don't believe that it will stall right now. It will move forward. That process may take years, but 2026 will see great movement in that process. I can guarantee that.
Yeah, that sort of accords with, my general view of this administration. It's a kind of a very different administration, the way channels of influence work. Because right now the channel of influence works from the top down. And Trump has made a decision on this. And, I think it's going to be a difficult maneuver to try to uh, finagle this rulemaking process. Trump has made a decision on this. He has declared his position on this, and what we've seen on other matters, generally speaking, is that fellow GOP members they tend to fall in line, albeit reluctantly sometimes, but they will fall in line with him on that. So let's move on here. We've got a comment here about lending being the opposite side on the balance sheet from deposits. Certainly correct. After rescheduling, what advice would you give to operators who are facing significant accrued IRS liabilities? Suehiko, this one looks like it might have your name written all over it, ranging from hundreds of thousands to millions of dollars.
Yeah. I think depending on kind of what this is referencing, right? Was there actually a filing, right, that showed the liability, and was disclosed to the IRS and now just sort of sits on the books unpaid, or is this sort of a concern about, potentially aggressive interpretation of costs and maybe understating 280E liability? Um, you know, Depending on how much cash is available, and really this is kind of always the challenge, and as we and operators know all too well, cash flow, the magic of balancing and managing cash flow is really probably the core competency that one has to acquire to operate successfully in cannabis. And generally speaking, what this amounts to is negotiation directly with the IRS for liabilities that are disclosed. And that can take any number of forms. And it really, from the sort of operational standpoint, it becomes a question of cash flow and what can you actually afford and stay afloat. So, whether or not, and, I think one of the questions that arises is whether or not if 280E goes away, does it act retroactively? That is something, absent any specific law that says that is the case, I would not count on that.
Yeah,
And so
thanks.
let me double down on
Yeah,
that
please
point.
do, Bob.
There is nothing on paper right now, proposed or otherwise, that I've seen, and this is what I do all day, every day, that would somehow suggest that 280E relief would apply retroactively. To your point, just to double down on that notion. So if you have accrued liabilities to the IRS, please don't expect them to go away. Please don't expect your current tax year situation to change, because if Schedule 3 occurs, it's going to occur in the future, and it hasn't occurred yet. So please proceed and seek guidance accordingly from your lawyers and tax professionals. That said, and I haven't followed these lawsuits. I haven't read these lawsuits. I'm talking about press. It's my understanding that several of the MSOs, maybe Trulieve at the center of this, have indeed challenged IRS taxation and have gotten relief under 280E. And, the nature of those lawsuits are a little bit beyond me because I haven't studied them. But it's my understanding that they look at the different categories of expenses and say, this one should have been allowed and this one shouldn't. This falls under the cost of goods sold deduction that's allowed. This one does not. So and again, those MSOs have, at least by reporting, have prevailed on a number of those retroactive application of taxes owed to the IRS by them related to 280E. So that's not to say that some sort of precedential ruling might come out when Schedule 3 is a thing. And for example, using Trulieve as an example, just because the name's in my head right now, Trulieve wins a retroactive battle with the IRS and says, hey, look, it's Schedule 3 now. We don't owe these things going backwards. That's not to say that there's not some cogent argument pun intended, perhaps there, Chris. There's not a cogent argument that Schedule 3 relief should be afforded in the rearview mirror. I don't know what that is. That's not my area of the law. I don't litigate or practice there. But my point is follow that, because if you're a small operator and you want retroactive relief, the big operators want that as well, and there's a lot more at stake for them. I mean, it could be make it or break it for some of them. We're talking about hundreds of millions of dollars owed in the aggregate, if not a billion or more at this point in time, versus, a few 100,000 here and there, which is not chump change, but it's not as significant. Those companies could take those hundreds of millions of dollars, those billions of dollars, and expand internationally where everybody's going right now. They could expand and do a roll up across the United States with that money. So they have a lot at stake. So follow those things closely. And there's also a great lawyer in the San Francisco Bay Area, Henry Wykowski, who litigated the first case against the IRS that prevailed. But it also identified that the cost of goods sold was the exception to the 280E piece, and that was just about the limit of it. If anyone needs tax advice, I might talk to Henry Wykowski in the Bay Area, because he's focused on cannabis and has a lengthy history with the IRS.
And I
Yeah,
think
Bob,
the
thanks.
thing to
Yeah, go
add
ahead.
to sort of to emphasize there is it really, so it's the litigation over the categorization of essentially 471 and what could be included in COGS versus the application of 280E as sort of a general matter. And then the other thing that I would advise is if you are operating with some sort of manufacturing agreement, right, a tolling or a contract manufacturing or brand licensing, just make sure between now and then, right? It would be very difficult retroactively, but between now and then, that you are sort of taking into account and modeling out what that 280E tax liability is, and that's accounted for in the economics of whatever deal you enter into. Because I see that overlooked very often, and it's the cannabis operator, the license holder, whose books are the ones that will actually show this income and will have the tax liability, not the contracted non-license holding manufacturer or brand.
Yeah, thanks for that, Suehiko. I am mindful that we've officially gone over our time. We got a couple of more comments and questions here. The last thing a regulator is going to want is a financial institution having to be taken over with cannabis deposits or loans on the books. And I can certainly speak to this. Leonard, you certainly know something about banking here. That is absolutely correct. One of the things I advise banks and credit unions is to establish very, very strict, both individual and overall loan limits when it comes to your cannabis, not only your cannabis loans, but also your cannabis deposits, and making sure that your board is kept aware of where those stand in relation to your limits, and making sure that you never go over those limits. That's all risk management. There's no regulation out there that tells you, what your limits should be in relation to your, overall portfolio or something like that. But your regulators are going to want to see those limits, and they're going to want to see that they're reasonable from a risk management perspective. Then we've got the last comment here or question from William Goldberg. What are your thoughts on timelines for rescheduling? I remain skeptical we will see any movement in 2026. I think I'll speak briefly to this. I think Bob knows more. He's got more to weigh in on this, but I do think we're going to see movement on this. It's just a question of whether we get through the final hurdle in 2026, because I do think it's going to be litigated. Bob, but I'll let you talk a little bit more about this.
Well, first of all, Bill Goldberg is one of my former colleagues at the Hoban Law Group, so really great to hear from him, and a pleasure to have him here. I mean, look, at the end of the day, the political capital has been spent. There's a press conference. There was an executive order signed. I have no, I have great confidence that this process will move forward. It's just what are the road bumps that the law allows for in that process, or when that process, the administrative process has concluded. Those are the only things in my mind that create uncertainty. And let's go back to this notion of I don't want to be so cynical as I'm getting year after year in my life, but this is an election day ploy. This is trying to get people out to vote at the midterm elections in favor of Republicans, much like what Biden did before for the Democrats. So you have to continue moving forward in this process, even if it gets gummed up with litigation before the November elections, and I'd say even before that, when the campaigning season starts in earnest. So let's stay tuned. But that's my take.
Well, Bob and Suehiko, it's been a real delight getting your insights on yeah, the executive order and moving forward and what implications that have. Your discussion around 280E, I think, was particularly insightful. And if folks want any more information on cannabis banking, there's a QR code there. And I also, finally, last but not least, want to thank the participants who've taken the time to tune in for this. It's really, really important that we have these discussions and keep the momentum forward toward cannabis and cannabis banking reform. So thank everyone very much.
Thank you.